moving towards performance and performance attribution. Okay, so predominantly what we're going to do in this session is try and cover question 1 and question 2 of the work I've just dished out to you guys. There is a question 3 and ultimately a question 4, which are on the back. Now, I'm aware that Binam hasn't covered this until the lecture this evening. So more question 3, what I'd like, or what we'd like, is it's going to be independent study. So after tonight's lecture, you guys can go away and do the later work by yourselves. And by all means, if you have questions, you can contact me, either myself or Imanol, regarding this. Okay? So I'm going to start with question 1 and say what we're going to do. I'm going to go through it and I'm going to set you guys away to try and do ultimately the same for question 2. Also, we did request that you bring a print screen of your portfolio attribution with you. Now, if you don't have that, that's alright, because I've got ones that I'll show you and how to interpret the graph. And what you guys can go away with is then you can go and get your own attribution graph from Bloomberg and start interpreting that. Is that alright? Okay. So I said, if you can't see the board, apologies, okay? Let's just moving forward, okay? So, first of all, we'll talk about performance, portfolio performance. Now, obviously, what Binam's covered in the lecture yesterday was quite simple. I'm going to take it a step further. I'm going to go towards attribution. So you guys are going to have you're going to get your portfolio performance, of course. And we're not wanting you just to say, I made profit, I made loss. That's 2 sentences in your assignment. Okay? We want you to critique your loss or your performance. We want to know where your gain came from or where your loss came from. Okay? Ignore, this session we're not really looking into the risk. We're looking into different sector allocation or asset allocation. Okay? Question 3, which is the independent study. That talks about performance on a risk-weighted basis. Okay, so that's what you'll be doing in the lecture this evening with dinner. I'm just going to get the work up here. By all means, I do like this to be interactive, so if anyone has any questions, you don't need to put your hand up, just shout out, Scott, I don't understand, or so on, okay? Well, this way a two-way thing. So, the first example is just a standard portfolio, okay? Yours doesn't look like this, because you guys, you don't deal with bonds or cash. That's why I'm using this as an example. That's why I'm going to set you guys away to do question 2, which is more to do with industries of actual equities. That will look actually like your assignment. So we've got a standard portfolio. We've got a manager's portfolio against a benchmark. And all we can see there is the returns of each component within that portfolio, and we've got a comparison of the returns against a benchmark. Okay, so you can start seeing a parallel with the assignment here. And what we're essentially trying to do is work out how well did this person do. Okay, how good was this portfolio manager against the benchmark? Oh, guys, come in, shut the door behind you, please. So, just looking at these figures, even the ones that you've got in front of me, can you just tell me something straight away? How has this person done? So you've got the figures in front of you on your sheets. Question 1. Okay. How well has this person performed against the benchmark? Don't be shy. Have a wild guess if you need to. You want to say something there, don't you? Come on. What do you spot? Has he done well? No. Why not? Why not, Ben?
Because most of his portfolio returns are lower than the index return, and the weight is pretty much the same. So most likely he will do a better job.
exactly. That's a pretty good summary right there. That's what you can surmise by looking at it. Clearly, the index for equities alone, okay, he's lost out. Okay, so his asset selection wasn't very good within equities, so his stock picking wasn't good. And you mentioned something about weighting there. Now you said the weighting's about the same. Okay, you're right, but there is some differences there. Well, what we use attribution for is to work out, was it the asset allocation that hindered the performance? In other words, issuing cash weightings to different areas, such as equities, bonds, or cash? Or is it the security selection that hindered them, which is, you've got a weighting of equities, where do you put your cash within the equities? That's what we use attribution for, is to see where he's lost out, or where she's lost out. Now, mathematically, it's very simple. Okay, so this session, when I'll say obviously you guys try and tackle the maps on an Excel spreadsheet, but fundamentally, it's the interpretation that we're interested in. So part E for question 1 asks about portfolio return. How do you work out portfolio return?
Some product.
Pardon?
Some product.
Some product? Yes. Do you know the specific formula? What do you times together?
Returns and weight.
Returns and weight, thank you. So that's quite simple. To work out any returns in a portfolio, you simply times the weight of that asset or that equity times its return. So you guys can either follow along with me, or you can just watch.
Scott,
Yep.
will this file be moved?
It's not available, so that's why it's
And later?
it will be available later. But as independent learners, you do want the answer, right? You want to find the answer, okay? It will be available, so please look at it and use it to inform your learning, not just to get the answer. There you go. So that's a quick sum. Okay, that is just mirroring that formula in Excel. We've also replicated for the benchmark. So as you guys quickly spotted, that clearly he didn't do as well. He underperformed the benchmark. Now that's very simple on a portfolio of 3 things. Some of your portfolios are vast. And I've seen some of your guys, some of your spreadsheets. They are vast. So by looking at them, it's quite difficult to actually spot what's gone on. Were you affected by your asset allocation with industry, or were you affected by your actual picking of rubbish stocks? Okay, that's harder to look at if you're trading actively quite a lot. If your portfolio is not very diversified and it looks something like that, okay, it's quite easy to look at. But we use attribution to try and understand these vast and diverse portfolios. So first of all, I'm going to go out of order. Okay, so I'm going to go to question C, which talks about asset allocation. Asset allocation is basically for your asset allocation, you're allocating your stocks per industry. So you're saying, okay, I'm on 10% financials, 10% telecom, and so on. In this portfolio, the allocation is between equity, bonds, and cash. Okay, so you could align this with the capital allocation line if you did that sort of stuff in question 1. So to do attribution, you need to kind of look at the weightings of your portfolio against the benchmark. Okay, that's why in your assignment you're doing a pure equities portfolio against a pure equities benchmark, just to make it that bit easier. So you can just do industry weighting issues. So as you rightly pointed out, there's slight differences. So obviously overweighted in equities, and underweighted in bonds. Now, that actually, these numbers, okay, just times by the index return to get the attribution of that. Now, because he'd overweighted in equities, that did have a positive influence on his return. And that's because equities did better than bonds. Is what you're really surmising from this. But that's quite misleading. Because you need to take that in, you need to take in stock selection within equities to work out his overall performance. And that's where the security selection comes into play. So security selection is really trying to pick out within the three assets what went on. And as you point out, obviously he did underperform by 0.5% compared to the benchmark. Again, he underperformed in bonds as well, cash being the same. So you just times all that up, and obviously the numbers are negative. So despite being overweighted in equities, that would have benefited him if he hadn't picked the worst stocks within equities. And a nice surmising sentence, well, you can total them up if you want. Surmising sentence there is the fund manager did benefit from having less bonds because the equities performed better than bonds. Ultimately, the selection wasn't very good. Now I'm just going to have this available in front of you. I'm going to put the formulas up there. And I want you to try and do it for question 2. So for question 2, look at the industries. First of all, just look at the table that you've got in front of you and jot down some things that you're going to expect the numbers to say. Did this person do well at asset allocation? In other words, did he assign the right amount of money to different sectors? And then look at it, compare stock picking within each sector. How well did this person do against the benchmark? You can do that from the table, but obviously do the maths, and that'll give you plus and minus signs to back up what you're actually saying. And I'm going to hop around and ultimately answer questions that you may have.
Верно сделала развесовку. Все то же самое. Все, что было с первым, типа то, что здесь у него больше, чем здесь, точнее меньше. Типа фигово. Приплосы меньше, значит лучше. Если здесь больше, чем здесь. Если меньше, если минус, ближе к нулю, значит он тоже молодец. Как один тут. Здесь он по-любому пацан.
That's what my spreadsheet looks like, so I want you to replicate that but using the question 2 data. Okay? Don't replicate what I've done on the board for question 1, you can get that online. You have to replicate that for question 2 please. The data's on the sheet, not on Blackboard, so you'll have to manually enter it in. Okay? Please do that. Boy, by all means, ask me questions if you don't understand the word I've just said. trigger, just abbreviate it, just your name. Questions? Questions? Okay, so just copy question 2. Question 1 will be available on Blackboard later on.
Полчаса все и не особо ничего. Все считать.
There you go for the manual route. Oh, no. The manual route to do in hand. Alright. What does that mean then? Okay, so that to me that looks right if we've done. So right now what do you think what that actually means in words? You're not very talkative bunch, are you? Oh. Chat with you as well, you know. It's not solely confined on anything.
Солями дело разных этих видов микробов. Он, короче, сейчас мне вчерашний выпал, я думала, ну, мне в принципе животных послали. А он прям ломанулся на себя. Хочу очень делать.
считают. Не так на это, короче. Рисунок. Да, вот это, короче, там лучше. Потом уже
When you've got some numbers,
вот это типа просил посчитать.
try and explain to me what's happened for them three sectors. What was good about it, or what was bad about it, or what, on hindsight, what should they have done, which could help them move forward. That's the sort of questions you want to be answering for your portfolio as well. Of course, using this sort of work. So since you're not really that interested in the numbers aren't that, the numbers aren't vastly different because of this, in this, but you're interested in the business side, might plus or negative in this case. But this is a very good stock pick.
Yeah.
If you look at the consumer goods, for instance, now you overweighted in consumer goods, didn't you? So it was overweighted. Which actually turns out to be a bad thing, because on the whole, consumer goods perform the worst, quite frankly. Okay?
Yeah.
So if you just look if you're not took into account that, you thought, oh, he's overweighted in this sector, that's going to be really bad for this guy. Okay, so that's what it's surmised by the
А потом месячный, по идее, на 12.
He didn't do very well at overall in that sector. But what he managed to do very well was pick the best stocks in that sector, which managed to minimise his losses. So that's what this application is targeting. Overall, he wasn't very good at allocating his money. That's negative. But what he was very good at was stock picking. Really what is the mind. What was your portfolio? I'll show you that. I'll show you if I didn't listen to it very quick. I'll show you the graphic easy.
Yeah.
Yeah.
It's a bit complicated.
I'll show you how I'll pull that graph up now. I'll explain what graph actually means.
Если портфель лучше, чем бенчмарк, тогда оверперформ. Если хуже, то наоборот. Ну, да. По идее, поделить на 12 то, что получилось.
А это вы так вышли?
А?
Это
Вот у тебя сумму получаешь, получается это год. Точнее, ну точнее не год, а сколько у тебя всего есть лет. Ну, получается, ты суммируешь, делишь, да, делишь на 12, получаешь типа месячно. Но вообще это бред собачий. Потому что, ну, каждый месяц, по идее, по-разному. Вообще эта информация предоставляется, ну, как сказать, в Bloomberg так написано. Нахрен надо читать, я не знаю. То, что мы записываем видео, я еще что-то ты прям вообще хочешь, я ручку. Будьте это фото фильма.
Question 3 was that that's the good example. Some good numbers. That's right. So try and interpret that now. So you've got the numbers look spot on, they look correct. But interpret them. So what do the numbers actually mean? Okay. What do they actually mean?
Тут фиг надо сейчас посмотреть.
That's looking about right. That's plus looking right. So, trying to understand what this actually means.
Да я хочу маму чтобы запись поставили. Ну, вон за что, на что мне. Чтобы в России подписать, в языке вставили. Нет, мне просто достаточно 15 минут, ничего не смотрю почему-то. I can see the majority of people have, well, got to a certain point where they've got the numbers. So
I'm just going to start to go through it now. Now, the first thing you know from doing this is you've got the figures in front of you. So in other words, this is using the benefit of hindsight. You can look back to see what's happened. Now, this, like I said, is going to more be, you've got to do some question 3 of your assessment. Okay? Now, I was posing in one of my assignments, I said, Scott, can you do this as a rebalancing strategy? What do you think the answer to that? Could you use this to rebalance your portfolio, first of all?
Yes.
Okay. With what caveats? Under what caution would you use it? You can use it.
You're overexposed in a certain sector.
Okay, so if you're looking at your weightings to start with, so you can compare exposure, yes. Okay, so it's a very good tool for just understanding where your asset allocation is. Right? But what about the performance side? What should you be cautious about? What should you be cautious about? I'm trying to give you some hints here. In other words, you don't know what's going to happen moving forward. Okay, so if you're going to use these, do bear in mind you're looking back to try and look forward. Well, looking back to look forward, which one will I like? Right, so the caveat of that is obviously market efficiency. Can you look backwards to look forward? Because you could look at this and go, well, consumer goods hasn't done very well for whenever this portfolio has been running. So I'm going to dump all my consumer goods stocks. And then doing that, you might miss out on a consumer goods rally, for instance. Okay, so if you're going to use it for rebalancing, obviously do bear in mind you're looking at past data here. Okay, it's really a tool of critiquing performance. You can use it, but on the caution that you're looking back to look forward. Okay, it goes against market efficiency. And random walk would argue that. So please don't don't just think you have to use it to rebalance, because we might go, well, what have you done that for when you're against this whole concept in the first place, and so on. So let's go back to this portfolio that we've got in front of us. On the whole, okay, he has performed a little bit better. So, brilliant. Well done, this person. But why has he performed better? What could he have done better to get an even bigger gain? Okay, so you're looking at the benefit of hindsight here. So I've highlighted these 3 industries. So someone tell me what happened for consumer goods then. For this instance, what happened? I know some of you wrote down what's happened, so go on. Don't be frightened to tell your classmates of your good work. It's not easy standing here. Come on, someone please contribute. You guys have got it in front of you. Share with your colleagues. I haven't seen any wrong answers yet, so you've got no reason to be shy. Well, you're not very independent learners if you just want me to tell you the answer, right? So come on, third year students. terminal relays the same. Consumer goods. Okay, the industry didn't do very well. Now, you're probably thinking, you overweighted in that sector. That's not a good thing because the sector didn't do very well. So, because he allocated money into the consumer goods area, on the whole, that probably wasn't a good idea. But what this person was able to do is pick the better stocks in there to minimise these losses. And that's what that's telling you. Oil and gas. Well, he underweighted. Right? But also, he didn't pick the better stocks. Now your numbers that you'll have in your attribution calculations probably very, very small. In fact, they are very, that one's tiny, the security selection. So even though you can see that he didn't perform as well against the benchmark, because this figure is very small, you can't really surmise that his stock picking was poor. Okay? It wasn't as good because it's negative, but because that figure is so small, you can't start saying that this person was absolutely rubbish at picking oil and gas companies, because the difference in performance is very minuscule. And that's really that was put in there because if you're trying to interpret this data, you also have to look at the size of the number. Okay? And financials. Okay, the numbers are still small, but financials, you're underweighted in the assets, so you should have really put more into financials. But what this person was able to do is he put his money in the better financials, hence the excess gain for performance purposes. So this process is a very simple tool of understanding what happened and why. Maths isn't very taxing at all. Okay? You might get a tick for the maths if you do it. But what we want is your critique of this. So we don't want to say good, bad, good, bad, good, bad, good, bad. You want to look at the size of the number. What's the most significant? I wouldn't want in your assignment to go through every individual sector saying, I did this well, but this not well, this not well, this well. That's not the purpose of this. This is looking at the scale as well as what actually happened. So if I was to write this in my assignment, I would really be focusing on the consumer goods sector, because that is obviously the biggest disparity in the numbers. So I'd probably touch on that one. Kelly mentioned telecoms, but they've got slightly bigger numbers. Yeah, so I'd be tempted to talk about consumer goods and telecoms if I was going to use this. Now, you've had a long lecture with me. Okay, I've not seen you since, so I apologise for overstepping the mark and taking too much of been out of time, so you had to stay an extra 3 minutes. That was my bad, sorry about that. But I hope it was useful. Now all this figures, it's easy to compute, but I know some of you guys have got vast portfolios. So doing this might take a little bit of time. So Bloomberg does it for you. And I'll show you the graphic producers. Okay, I'm not going to show you how it produces. Okay, you should know that by now. But this here is a very good backup because I'm aware that not everyone's using Bloomberg. Okay, Bloomberg's only advised to use. So if you're not using Bloomberg, this is a very good peer-based alternative of doing it. I'm going to dim the lights for this. Tell me if anyone's got any issues with seeing this. Does this look familiar? Right? What this is the attribution summary page. So this is within the port function, P-O-R-T. it's under the last tab, attribution. The main view is the numbers. So kind of like the Excel spreadsheet we've had. So the numbers behind this is in the main view. But the summary does a very good snapshot. So if you're, what you have to do here is you have to pick your portfolio. Now this portfolio is actually the investment competition that you guys are in. This portfolio is everyone's ideas combined, so this is like a collective view of how everyone's doing. It's against the FTSE 100. Now to do this, the best thing to do is just sort it by sectors. Okay, this is GIG sectors, but you can pick another sectors. It doesn't make, we're not interested. Just make sure it's in sectors, and it looks something like this. If you're using this for your performance over the whole period, by all means use maximum, and that Bloomberg will obviously understand that it's for the whole range that you did your portfolio. Now if you're using this for rebalancing, obviously pick the periods you want to rebalance calls. So brief summary, you guys are doing quite well against the benchmark. So the all returns 4%. That's probably all because of Alexei. Thanks for that. So you can see you're doing better. Now this section here is all about the asset allocation, we'll call it. So this is where the money is derived into different sectors. Now ignore the cash element here, because obviously the competition does involve cash that people haven't spent yet. But ultimately, quite a lot of you guys like telecoms. So you guys are investing in telecoms quite often. That's mainly everyone investing in Apple for some reason. And everyone's underweighted in the financials. That's how you. This is purely about weighting, how you compare to the benchmark. Now, if you have a portfolio strategy where you're trying to follow the benchmark and have a beta 1, this graph will probably look like a straight line. So this could be a good snapshot if you want them portfolio managers that are trying to follow the benchmark. This should be pretty minuscule and shouldn't look like this. But over here is where we look at the total attribution. You got the headlines at the top. So overall attribution is actually positive. Okay, obviously you've got positive returns, so that's understandable. But what we can see is where everyone's falling back slightly is to do asset allocation. But ultimately, what's driving this portfolio's performance is you guys are picking the best stocks. Now this is something obviously we didn't cover in the previous example, but if you guys are investing overseas, currency effects could be a main driver. And in this example, it has actually had quite a significant hindrance on the portfolio. So how you read these graphs, I'm going to stick to healthcare. So this one here. So in healthcare, you're slightly overweighted. Now the blue line over here is all about asset allocation. The red line is stock picking. The green line is currency. So ultimately, because you're overweighted in this area, that doesn't actually make that much difference. Okay? That pretty much goes for the full portfolio. Because the blue lines are so small, the allocation of assets isn't actually that significant driving performance. Ultimately, it is driven by stock picking. So obviously, what everyone seems to be doing in IT companies, okay, the big overweight doesn't make that much difference. It's purely driven by you guys are picking the better performing stocks. And that's because everyone's on bought Apple shares, quite frankly. Moving down, consumer staples, okay. Because you're underweight, that means no bearing whatsoever. It is purely driven by stock picking. Energy is quite interesting. So for most of you guys that are investing in Russian energy sector in this competition, you guys are picking very good stocks. Okay, I know you are, because I can see the performance on them myself. But what you are getting, what's actually going against you is the Russian ruble. Okay, so the currency effects are pulling down this portfolio quite a bit, certainly for energy sector stocks. Yes?
So in the telecommunications industry, there's little difference in the allocation, but in the attribution, allocation line is nearly 0.5%. Why is it so big if the real rate is not so different?
That's quite hard to surmise from this graph. So good, that would probably need further investigation. But I'm going to assume, I'm surmising that the telecoms industry hasn't done well over the last, since the competition has been running. I'm assuming telecom stocks have been quite negative here. And because, I mean, there's only a minuscule overweight, but I'm assuming because the industry isn't doing very well, it's probably significantly not doing very well compared to the rest. I'm assuming because the slight overweight is having quite a big impact because of the sector's probably performing very poorly. That's what I would surmise from this, but I can't say that's for definite because I don't know if telecom services are doing poor. But again, there's a lot of currency effects there, so I'm assuming it's overseas telecom industry, and the stock picking has been very good. So that's why I'm just surmising that the industry where people are investing is not doing very well. So that slight overweight is having a big hindrance because of the. But it's probably worth looking at. Is telecoms doing really bad? So, thank you for pointing that out. It's looking at this at face value does have its problems, and that's probably one of them. Any questions on what I've said here? I'm also going to show you a limitation of this graph. Okay, that being one, thank you, Fagler. The other limitation is this portfolio. There's one fundamental difference in this portfolio. Right? Obviously, you look at the portfolio return. I've made 75% on this portfolio. Is this graph useful in that instance? How do you tell anything from this graph?
That it's doing well.
That's all you can tell, quite frankly. What this graph is, though, is it is pretty much over a year and a bit. So the bigger the period you have for this graph, so this is an attribution for the whole year. Okay, it gets less important. Okay, because it takes a lot of factors in over the whole year. What you really need to do is narrow down the specific time frame. So the time frame you guys have for the portfolio investment is quite a good time frame. Okay, the longer the time frame, the less useful this graph may become. Okay, because I've obviously just been a very inactive investor here. I just diversified from day one and did nothing for this portfolio. And all you can tell is I seem to pick some stocks that did awesomely well. That's all you really can tell. But because the time horizon is so vast, this graph is quite, it's not worth interpreting essentially, okay? So, this method does have its flaws. So what you guys really need to go away with this session is pick up the Excel spreadsheet, okay? The maths is there for you. Input your portfolio if you want, or alternatively get this. Print screen it out, just write some notes. Look at the numbers, think, alright, what should I actually comment on? What's more important here? Pick your actual sectors, because you've got a confined word limit. You don't want to talk about them all. Okay, it's best to focus on a few of them. Moving forward, you've got the lecture at night which talks about the risk-based return. So after that session, please look at question 3 on the back of this work. Okay, Imanol has produced quite a good snapshot summary, which will also be available on Blackboard from Thursday. Please use that to inform further research. Next week, you guys will be doing all about behavioural finance. So, well, my sessions, the PCs will be off, laptops will be down, and we'll be all around in little groups. Imanol might go the same. So there will be pre-work for that, but the pre-work is just really thinking about decisions you made. And this pre-work will be made available after the guest lecture on Thursday. Okay, so I hope you're all going to that from Gerald Ashley, because it is all on behavioural finance. I've seen the lecture slides already. It's a very, very useful lecture to attend, because that lecture plus BINAMS on Monday will inform all of next week's session. Okay? Any questions, by all means, please ask. Any further questions, by all means, speak to me, Imanol, or BINAM.
How do we choose the benchmark?
The benchmarking assignment, it's the FTSE 250. Okay, that's in the assignment criteria.
So we need to compare portfolio only with FTSE 100?
No, so in the assignment criteria, it is FTSE 250. Well, that's the suggested benchmark.